Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy blue chip stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 blue chip stocks that all come in with a strong buy consensus from Wall Street analysts. Now, what is a blue chip stock? Well, these are typically well-established and well-recognized companies that are often leaders in their industry. They have proven track records of profits and growth and are often considered a fairly stable and reliable investment. So today we're going to take a look at these 3 companies, all probably names that you've heard before, what it is that these companies do, and of course what Wall Street is predicting for the stock's future. Just before we get into that, this is your reminder that if you enjoyed today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. You can also download the TipRanks mobile app using the links in the description down below to access all of your favorite research tools on the go. Now let's get right into our 3 strong buy blue chip stocks. We're kicking things off with one of the biggest names in the finance industry with JP Morgan. Trading under the ticker JPM, their stock currently trades at $191 per share. Over the past 1 year, it has climbed over 39%, and in the last 3 months is up 13%. They are a leader of global financial services with assets of $2.6 trillion worldwide. They are one of the oldest financial institutions in the U.S. with a history dating back over 200 years. Under their JP Morgan and Chase brands, they serve millions of customers in the U.S. alone, and some of their clients include the world's most prominent corporations, governments, wealthy individuals, and institutional investors. They have a presence in over 60 countries with more than 240,000 employees. JP Morgan does also pay a quarterly dividend, which they have been steadily growing for over 15 years. And their current quarterly dividend comes in at $1.15 per share for a yield of 2.24% and a healthy payout ratio at 25%. The bank did just report their Q1 earnings almost a couple of weeks ago, and the stock did take a bit of a dip following. Now, the company did beat on both earnings and revenue, but had a bit of a lackluster outlook. For their first quarter, they reported earnings per share of $4.44, easily outpacing expectations, and revenue came in at $41.9 billion, which grew 9.5% year over year. Their net income increased to $13.42 billion, and their net interest income stood at $23.2 billion, which was an increase of 11%. Their CEO noted that many economic indicators continue to be favorable. However, looking ahead, we do remain alert to a number of significant uncertain forces. The stock has mostly recovered from the dip following that earnings report, and we have had plenty of analysts reiterating their buy rating on the stock. One analyst from Oppenheimer weighed in following the quarterly results, saying that other than that perhaps everybody already owns and loves it, and that there was no major upping of guidance, the firm doesn't see why the stock should have traded down. The results looked like a solid beat. The JP Morgan stock does come in as a strong buy with 23 current analyst ratings, breaking down to 18 buys and 5 holds. The average price target comes in just shy of $210 per share for an upside potential of 9.5%. Looking at our most recent ratings, a lot of them range between that 10 to 14% upside. Our high-end price target is 14.8%, and we do have several price targets at that point, and our low end is actually a buy rating with a downside of 3.5%. For our second blue chip stock, we're taking a look at Merck Co. They trade under the ticker MRK and are priced at $126 per share. Over the past year, they've grown 12.4% and have climbed 7.4% in the last 3 months. The company does also pay a quarterly dividend at 77 cents per share for a dividend yield of 2.34%. Merck is a global healthcare company with several well-known prescription medicines, vaccines, and healthcare therapies. As a research-intensive biopharma company, they work to deliver innovative health solutions that advance the prevention and treatment of diseases in people and animals. Their areas of focus include oncology, vaccines, infectious disease, cardiometabolic disorders, immunology, and neuroscience. Last year, one of their cancer drugs, Keytruda, reported a whopping $25 billion in sales, making it one of the world's top-selling drugs that year. Merck will be reporting their Q1 earnings report in just a couple of days on April 25th, and this does follow an earnings beat during their last quarter. For their Q1, analysts are anticipating earnings per share of $2.04, which would be a notable increase over last year's. For their Q4, they reported earnings per share of 3 cents, which was 14 cents better than the anticipated loss per share. For their fourth quarter, they saw worldwide sales of $14.6 billion, which did increase 6% year over year, and their full year sales came in at $60.1 billion, which grew 1%. Just recently, an analyst from Berenberg increased their price target on the Merck stock. They bumped up their Winrevair peak sales forecast to $6.8 billion from $4.8 billion, following its broad U.S. approval in pulmonary arterial hypertension and higher than expected price. The label allows for convenient at-home administration without onerous safety monitoring, and the firm believes that Merck is well positioned to deliver above-sector average sales growth and margin expansion in the medium term. Their strong buy rating is based on 20 current analysts with 17 buys, 2 holds, and 1 sell. The average price target comes in at $135 for an upside of 6.65%, and you can see on the right here we do have a wide range of price targets. At our most recent ratings, we have quite a few coming in at that 6.4% upside, a recent high-end price target with an upside of 14% here from Barclays, and our sell rating is our biggest downside at negative 18%. And third on our list today is retail giant Walmart. They trade under the ticker WMT, currently priced at about $58 per share. Their stock has climbed nearly 17% over the past year and is up 10% in the last 3 months. Of course, Walmart is a retailer known around the world with over 10,500 stores globally. Not only do they have a strong presence with their Walmart supercenters and neighborhood markets, but the company is also making a lot of advances in e-commerce, with same-day delivering, curbside pickup, and even advancements in drone delivery. They also pay a quarterly dividend, currently sitting at 21 cents per share for a yield of 1.25%. Their Q1 earnings report is due out in a few weeks on May 16th and does follow some strong fourth quarter results. For their Q1, analysts will be looking for earnings per share of 52 cents, which would be a few cent growth compared to last year. This follows the fourth quarter where they reported earnings at 60 cents per share, beating expectations by 5 cents. They also saw strong revenue growth of 5.7%, with revenue coming in at $173.4 billion, and their e-commerce grew 23% globally, surpassing $100 billion for the year. A top-ranked analyst from Tigris Financial reiterated their buy rating on the Walmart stock just last month. The 5-star analyst said that Walmart continues to benefit from operating, merchandising, and execution excellence and ongoing growth in e-commerce and advertising. Increasing e-commerce and delivery capabilities, combined with the ongoing expansion into high-margin services, including advertising and its ability to leverage AI and its massive customer transaction database, will drive increasing margin expansion and an ongoing acceleration in business performance trends. With 28 current analyst ratings, the Walmart stock comes in as a strong buy with 25 buy ratings and 3 holds. The average price target comes in at $65.73 for an upside potential of 12% from current prices. Down below, we have a lot of price targets in those mid-teens. On the low end, we have 1 buy rating with an upside of 5.6% and a high-end price target with an upside of 21%. So that is a quick look at 3 blue chip stocks, all with strong buy ratings from Wall Street. Let me know your thoughts on these 3 companies and what other blue chip stocks you love in the comments down below. I always appreciate hearing from you guys. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.